Well, let's just get your thoughts on what was the big story of last week, and that was the announcement coming from the Fed about this priority of allowing inflation to overshoot, putting more emphasis on employment. And we know what their desire is, but there are some questions over how they're going to do this. And how do you think it impacts the greenback from here?
Well, I agree that operationally, does it make any difference? We're going to hear, I think, from Rich Clarida later tonight. I think that will be interesting because he was the architect of the whole monetary policy framework review. I think, in essence, what the changing framework does, and to the extent that there is credibility associated with that, and it's the credibility of the commitment that I think is important from a market perspective, and markets generally are willing to give, I think, the Fed more kudos in that respect than maybe other central banks, partly because they are much closer to having achieved the inflation target. But what it does do is, if it succeeds in underpinning inflation expectations or potentially sees them move higher, then what that will do is underpin this big decline that we've seen in real interest rates really since the beginning of 2019, which has only really started playing out for the dollar in May this year. So if it succeeds in doing that, and then we're back in sort of purchasing power parity theories. If one country's inflation is higher than another, over time you should see the currency going down. So whether you look at it from a real interest rate perspective or a relative inflation, which is sort of the other side of the same coin, if you like, it does point to dollar weakness. But I would argue that dollar weakness was already baked in the cake from the decline, the substantial decline that we have already seen in real interest rates. And as long as that reduction in real rates stays where it is, it doesn't have to go deeper into negative territory, it's still a recipe for further dollar weakness.
Okay, by what magnitude, Ray? I mean, what is a realistic expectation here? How low could the dollar index go?
Well, we're down roughly 10%, plus or minus a little bit, depending on what index you look at. In our forecast, we're looking at the same again. So we've got another at least 10% decline coming through in the next 2 years as far as our forecasts are concerned.
Wow.
So,
and this makes